Hello, everybody. Today is March the 24th, 2025, and I'm going to give you a quarterly update on the S&P 500 outlook and some interesting thoughts about Tesla, the electric vehicle manufacturer, and other things. The Tesla 2025 situation is material to thinking about the S&P 500 outlook, in my opinion. So we'll get through this as well. I want to point out these are my views. I do have a PhD in MIT in economics, but they're not necessarily the views of Zacks Investment Research. Keep in mind, this is my views. Okay, let's do this S&P 500 strategy review. This is a COVID story, folks, and a post-COVID story. On the left, I've got 5 tech mega caps: Apple, Amazon, Google, Meta, Microsoft, and Netflix down here at the bottom. And as you can notice, here is 2019. Yeah, they were trending up, but it wasn't explosive like it is now. And all of this was caused by COVID. And then the post-COVID run-up, they entrenched themselves as giant monopolies, oligopolies, and they drove up their share prices on momentum. Momentum trading around the mega cap stocks. Now, over here, we've got Tesla. Fascinating to realize. You could have bought Tesla shares below $20 before COVID. Keep that in mind. I mean, the bottom here for this company is actually $20 a share. It can gap down to $20 a share. Now, right now, we're in the 230s from the highs at the 430. We again just went back to the COVID period highs in the recent period, and now we're back to somewhere in the middle of the range. Easy to see us touch that 120 low in 2020. Early, and it should be kept in mind that this is still a range trade until we break the 120 level. Can bounce off there. Could bounce at 180 or 200 as well. We'll see. But I do think, as you notice here, with the spike in the run up, Tesla does follow the Mag 7. Even it is part of it, and these are the other Mag 5. Just keep in mind that it's a 2.5 beta stock. Much more high beta than these other names. So as you've seen the share price, it moves much more radically. And when it comes down hard, it's going to move more than these mega caps, but it's going to pull everything down. There are all these ETFs, they're all in, Mag 7 ETFs, market-wide S&P 500s, and many other reasons for to think that tech in general, and the mega caps particularly, will move with Tesla. So if Tesla moves down, they're going to move down with them, I would think. Momentum index, Swift and linear. I just want to point out here we have dropped. Poof. Swift and linear, I mean, it's very different than this drop, or this drop, or this drop, which had, backing and filling and went on for sometimes as much as, 5-6 months in these cases. This one came down hard and fast after the election, and people reappraised things. However, my fair value is 55.94. 55.94, and that is not so far from where we've been trading, just about 5,600 for some time now, last few days. And that tells you that there is a valuation reset towards a 5-year average PE of 18.2 underway. And I've confirmed this in my own assessments, and I will show them to you. But right now is an interesting fair value number, because this is actually where the market should be trading at. Obviously, fair value is just a concept, and markets don't have to abide by it by any means, and may correct over and above it. But keep in mind, at 56.38, this is basically 55.94, just below 5,600 is my fair value. All right, options VIX index. The median is 19.4, and we're actually only at 24.2. So in general, yeah, we did go up. And I point this out to you. It was not as strong as you think. Certainly not as strong as we saw in 2022. So it's a good news, bad news thing here. We can get into a period for a year of much higher volatility from here. The good news here is the 3-month price change is down at a low here where it typically bounces. That's the bull case. Price closed, 3-month percentage change. It was quick to get down here, and we may just bounce right on back up in the range. So over here is the days to a 10% correction, less than 20. There's been all these episodes since 1928, and took us 16 days. It was really quick. But 1 month later, on average, you get a 6% move up higher, a 60% of the time. The loss might be another 7%. 6 months later, 90% of the time, there's a 16% gain. So in general, 6 months from now will be September. So I don't know what's going to happen. We can have a lot of volatility for a lot of long period, but these periods, these green arrows are when we last saw something like this. And you can see, it's just not clear what's going to happen for a few months, but more clear long-term that there is a bull case to be made. And we are, and the 3-month percentage range have a pivot point. Keep that in mind as well. All right, price change. This is the price of earning, the PEG ratio for the S&P 500. Again, I'm going to notice we're back at that 1.6 level. That generally, is a good solid entry level. Enterprise value to cash flow is also at a nice entry level. So again, here, you're confirming the fair value that I did, is there is a nice place for you as a share investor right now. Keep that in mind. Here's what we got. We get 20% decline in 2022. Then we followed it with 25 and 24, and now year to date, we're about 5% down. This probably is much worse on a correction basis because we got up a little bit in January before we went down again. Keep that in mind. Okay, PE forward valuation, 20.7, still overvalued. The median is 18.1. You can see that, we did pull back, but, the earnings premium is really, really low. And keep this in mind, the growth S&P 500 and the S&P 500 market weight are tracking one another this time around. This is not the 21 period where there was a lot of bet on growth coming out of COVID. This is a very different period where everything, value and growth, is moving at the same kind of speed. So in short, there's also nowhere to run and hide. 5-year performance, 134.5 since COVID. 134.5 is 18.6% a year. So that was the chart. Again, here is the big year-long sell-off because of the Fed rate hiking. And here's the performance since then. And this now looks, again, swift and linear, but not unexpected here to see some pullback here. And it's not clear whether this is a top or whether it goes sideways for a while. But what is clear is we are at much higher margins now than we've been in a long time. And that is the last time we topped out. So the problem here is, can this go higher? Probably not. And that's more bearish than bullish, folks, because we're probably at a profit max for the stock market. PEG ratios. I want to point out Infotech PEG right here. It's in green. This is the line. Again, it surged up to 2. Recently, that was the AI boom surge. And now, good news is we're back to the 1.6 level, which it likes to be at. And again, this is what I'm talking about with Tesla and all these other share selling episodes, AI episodes like NVIDIA. You're back to a nice entry point for tech shares at the S&P 500 level, Infotech shares, the sector level. That is good news. And keep in mind, you see the same thing here on the sector PE forward 12 months. Now it's back to a 26.7. And the median over the last 5 years is 26.9. So again, generally speaking, Infotech should be on your radar screen. It's one of the spots that you can pick up right now. This is consumer staples, by the way. That's just including Walmart. So it's kind of a Walmart story, and I would discount it otherwise. All right, consumer confidence and disposable income. Two different stories. We know that consumer confidence story has been relatively poor since the inflation rose up. People don't like inflation. They find it harder to accept. But realize disposable incomes have really done a strong performance the last 4 or 5 years. And people, realize it or not, are in much better shape than they think. Might be happy about the prices, but they have more income to go out and spend than people think. And keep that in mind. That's a bull case. The CPI inflation, I just want to point out here is that big surge in inflation. And you can see that we have drifted down and are drifting down. And that's the good news. The Treasury year and the tips are kind of flattish. The tips are at 2.0 and the Treasury yield is 4.5. So tips in between here and it is basically an inflation rate. And you can see that's 2.5 on the forward look, which is not great news because you'd like to see that closer to 2 than 2.5. Obviously, 2.8 is where we are on the actual inflation rate, and that's for all items of consumers. All right. Also, keep in mind the ISM PMI for manufacturing has popped over 50 for the first time in a good length of time, but it's been staying around sideways for some time. Anything you got to worry here about is big moves to 40. That is recession stuff, but people overlook this idea that the PMI really has to move down hard, get in 2000, 2009, and 2020, below 40 for you to be worried. 40, not even 45. It can go down and come back up like it did here, like it did here, like it did here, get below 50 and bounce. It's not uncommon. All right, now let's get into Tesla. First thing I want to point out, Tesla is a dynamic innovator, yes, and it has changed the space like Amazon and Netflix did. However, its market share is down below 50% from 80% in 2020. In post-COVID environments, many more competitors domestically, and of course, China is the biggest one. And it's getting eaten alive in China. A lot of news out of China these days and just how beaten up this area is now. Cybertruck's been recalled, all Cybertrucks. Only 46,000 sold, not 250,000, which is the Giga Texas factory was built for. And we don't even know how Berlin's going in this environment. It can't be going well. German people are against Tesla now for the political tumult that has resulted from his interaction with our election. So I cannot imagine it's good. So really, where is it good? Austin, got the Cybertruck, not good. Berlin, not good. Shanghai, not good. So maybe 2 of the 5 gigafactories are actually performing well. It's not a great situation for right now. We do keep an A for growth and a B for momentum, though, surprisingly. I just want to show, though, this is the key one. The last 60 days, they were expected to report 73 cents. Now they're down to 61 cents. 61 cents times 4 is 240. So this call for 290, $3 a share this year will go to 240 on this if it keeps up. And that will just continue to ratchet down these estimates for the annual, which is a problem for the Zacks rank. That's a -8 and -7 here. Here I've got April 20 for October 24, and now this big surge back up and down. Really, unless you got out, you're basically still in a decent momentum pattern. That's why we're going to be from momentum. But these estimate revisions are very negative. And the valuation is very poor. So it just demands, your preset condition about how this stock's going to do. There's always bulls in this stock, so you got to worry about that if you're a bear. Here again, I just want to point out enterprise value to sales at 10 versus the S&P 500 at 4.8, still double on a sales perspective. So the stock, like I said, can go from to $100 a share and just get back to the S&P 500. There is no growth now in the stock. The beta is, like I said, 2.5. 2.5 beta is extremely whippy stock. And that helps you on the way up, move up quicker, but it hurts you on the way down. The forward PE is at 81. Whew, 81. That's crazy. Okay. So, earnings they missed, and they had a -7% decline in their last report that we have online. Not -7% decline in production and a miss in earnings. It's just not a good story right now. And what do we have, like everybody? Having said that, our analyst writes, growth prospects are strong on EV, storage, supercharger, and AI advances. I just want to point out, supercharger, we got BYD news that they've got a 5-minute supercharger now, and there's Iona, you should know about, which is leaving its beta stage and will be ramped up just like the Tesla supercharger across the consortium of many auto companies. Storage and battery generation, there's solid-state batteries on the way, lithium-ion will be on the way out, and NVIDIA owns the AI space. No question about it. And they've got $1 trillion market cap as well, bigger than Tesla. So yes, they have a robust balance sheet, but in no situation here, other than the supercharger, are they the market leader, and certainly no longer in autos. China is. All right, so again, everybody's putting all their weight on a 10% of the business, which is energy generation storage. At the end of the day, this is 10% of the business. Even if it goes up 50%, it's 15% of the business. It's still a car company, folks. NACS is the North American Charging Standard. That is their supercharger business. They do have a lead, 65,000 connectors, but like I told you, Iona is on the way, and actually BYD's charging system. Best thing to think about in the United States terms is it gets licensed to somebody like Iona, and they just kill them. I mean, all Iona has to do is go talk to BYD and get a license, and they've changed the name there. Okay, so risks. Like I said, declining vehicle sales and profit margins. They've got high operating expenses of CapEx because they're ramping up the 4600 battery, and they've got all the supercharger infrastructure, and now they've got this AI grok expenditure. Competition is thriving in the United States. There's 7 or 8 players now. They are down to 50%. And China is stiff competition, and they have seen their share eroded by epically large number of names. I was in South America recently, and there's tons of electric vehicles sold for sale down there that names of you never known. Beyond Li, XPeng, NIO, and BYD. Many other names down there. So they're flooding the market, the Chinese, with cheap vehicles everywhere, and people like them. They say they're good. So here's a look. Keep in mind, I said this at the Zacks Investment Committee meeting, this is a 2022 story. If you're thinking of Tesla in a bullish case, you're 3 years behind the curve. Massive competition and a Twitter effect is what I wrote here. Yes, they bought Twitter here, and competition in China ramped up after COVID. They spent all of COVID getting their Chinese electric vehicles together, and they're ramping it up. So this is all just perma-bear guesswork, and I wouldn't discount it. All right, EPS, like I said, you're perma-bull, you're basically living in 2022 at the end of COVID, and you're not recognizing that sales have been flat since then. Again, there's the perma-bear bull story. There's so many people who think he can turn it around. I'm not one of those people. So here's my example. Here's the question that back in August, they weren't even close to putting a robotaxi. Now they're saying they're going to do it in Austin in June. And I just want to point out, Waymo has been in several years in Phoenix, Los Angeles, San Francisco, and soon they will also be in Austin, Atlanta, and Miami, 6 places. I think this number is 200,000 a week from Waymo now in the last year because they're expanding. So they have an existing competitor, Waymo, for this robotaxi stuff that's already doing 200,000 trips a week without incident, right? Without incident. So they're done moving ahead, and they're entrenched. Here's what I did when I typed in, can Tesla supply a robot taxi soon? I did this on March 15th. The answer is yeah, they can, but industry experts have cautioned significant tech and regulatory hurdles remain. Yes, they do. And again, regulatory bodies here are the California Public Utility Commission. They did get a license for this, just the other week, but that's just for a license to test it out, not for expansion across California. Again, this is the state level, folks, not the federal level. No control of this. So I'm bearish, and I think you should be bearish if you're a fundamental investor, and that should give you an opportunity to invest in tech stocks that are not Tesla. That's my point, and I want to keep it in mind that I've shown you some really nice opportunities in the infotech space as if Tesla goes down, and I think you should look into them. So thanks for attending. I hope you liked it. And here's where you can get these slides. 866-794-6065. Send us an email at strategycall@zackspro.com or find us on the web at www.zackspro.com. Yeah, I think this is a great talk, and I think it's really useful to review these slides, particularly the strategy part. So go ahead and give us a call, 866-794-6065, or send us an email, strategycall@zackspro.com. That's it. Thanks all.